Welcome back. Well, let's get into that Burger King IPO and get a better sense from who else with the management themselves. Rajeev Varman joining us. He's a CEO at Burger King India. Rajeev, good to have you with us. So much curiosity around the IPO. Tell us about your anchor book, what the response has been like. Has it been better than what you were expecting?
Yeah, we have had a fantastic response. We opened the anchor book and closed it yesterday. That was a total of 364.5 crores and very strong investors. If you look at the list, some of the foreign investors that we have on that list is FMR, FIL, Fidelity, Eastspring, GIC, Amansa, and even a very, very strong list domestically. If you look at it, SBI, HDFC mutual funds, Birla mutual funds, Sundaram, Nippon, ICICI, Prudential mutual fund, and I'm just naming a few of them. We had a total of 21 total lines on that. So very strong response.
Okay, great. What are the key value propositions as well that you see for Burger King for the IPO? Tell us a little bit more about the kind of plans you have for the company.
Let me share with you the investment highlights. I think that's good for investors to know. See, this is, first of all, world's second largest chain, right? It's in over 100 countries, over 18,000 restaurants around the world. So it's a very, very strong brand with large and very high following and awareness levels, right? Now, in India, we have a master franchise agreement with them. The master franchise agreement basically allows us to do two things. One is, of course, to run the business, but it also allows us the rights to run the brand, to execute the brand here in the country, which is a very important thing because that helps us run our own supply chain, build our own menu product, get our own distribution system, run our own advertising, and build our own NPD product. So it's a very, very strong, attribute to have in a master franchise agreement. The other thing is the franchisor is also part of this JV, part of this master franchise agreement, which is a good thing because they don't do this in every other country. They do this very strategically in very good growth countries, and we are very glad that they're part of this JV here in India. Now, if you look at the agreement, it's a significantly long agreement. It's until 2039. So we have a long road ahead. And the growth target that we have committed with this master franchise agreement is to build 700 restaurants by December of 2026. So a large, vast road ahead as well for us to build this business.
Sure. What are the changes, though, that the company has made during COVID to try and reduce the impact in terms of costs?
So a lot of things we have done. If you look at, after March 21, when everything closed down, the opening of the restaurants was putting in place a very effective program of not only social distancing, but hygiene, disinfectants, sanitation. For example, every restaurant was fitted with these glass shields in front of the POS systems so that it would protect not only the employee but also the consumer. The employees are wearing masks with shields, temperature taken every day. We used to disinfect our surfaces every 30 minutes. Every 60 minutes, we have brought that down to 30 minutes. So a lot of steps we have taken. Even in delivery, if you look at it, the bags that we are sending out are tamper-free now. If you try to open the bag, it just tears. We're putting a small sachet of sanitizer just to remind people to sanitize their hands before opening the bag. So a lot of small steps we have taken in doing the right things, but also starting to educate. For example, we put a small card along with our delivery bags, which actually highlights the things that we are doing as a company. So a lot of steps have been taken to open on the side of consumer, but also on the side of the company. We have taken a lot of steps in terms of renegotiating a lot of contracts, renegotiating leases to bring down some of the cost during this COVID. These negotiations, some of them are temporary in nature. for the next few months, and some of them are long-term, as we saw this opportunity to really dig into our processes and systems and see what was right and what we could improve.
Sure. Rajeev, being a late entrant in the QSR space in that sense, what is your current market share and what is the same-store sales growth that we can expect going forward into the fiscal?
So I won't make any forward-looking statements, but let me share with you, the past 5-6 years that we've been here. We've been called as the fastest to 200 restaurants, also one of the fastest growing QSR chain in India. So we started off in November 9th of 2014. That was the first restaurant we built in Select City Mall in Saket. Post that restaurant, we continued building restaurants in cluster strategy. That's the strategy we follow in NCR as well as in Mumbai. And then we kind of spread that, went into Bangalore and continued to build. Today, as we said, we have 268 restaurants. And like I was telling earlier, our growth plan is to get to 700 restaurants by December 2026. If you reflect on our sales, and if you look at F18, F19, F20, if you take the 3 years and just compact those 3 years, we have grown over 40% from what we were in F17. So that's the kind of same-store sales. I'm not talking about overall sales, same-store sales growth. And if you look at the Technopack report, is the report that I follow quite a bit. If you look at the growth that they're outlining, first, post-COVID, because there's a COVID impact, and they expect that the F22 sales in Q1 and Q2 is going to return 98 and 99%. And then Q3 and Q4, they expect that sales to grow 10% above the pre-COVID numbers. Also, their outlay for, from 2020 to 2025, the 5-year outlay is 23% growth rate. So those are the numbers that the industry is guiding us on.
All right, Mr. Varman, we'll let you go on that note. Thank you so much for giving us a sense as to how, the business is operating and what we can expect. All the very best for that massive IPO. Well, getting